If you have two jobs, a side hustle, a spouse who works, dependents, maybe you're even self-employed, then this video is for you. We're going to be diving into more specifics about the W-4 and how you should be filling it out. Now, before we get started, if you just want a step-by-step instructional video on how to fill out the W-4, we've done that before. Check out the video in the description below. Today's video will be more in depth about some different examples, some different kind of more obscure uh, ways that you may need to fill out this W-4 form. So real quick, why a lot of people end up with issues is because they'll get a new job and they'll basically just leave. They'll basically just do step one, which is put your name, and what's your filing status? I'm single, I'm married, filing jointly. And then a lot of the times that's kind of all they do. And then they end up in a situation where maybe they owe, or the inverse of that, they're getting a huge refund. And so it's very important that if you have multiple jobs throughout the year, if your spouse works, if you're self employed, that we customize the W 4 in a way that you're not ending up under withheld. Because then, if you're under withheld, when you file your tax return, it's possible that you might owe some penalties and interest in addition to the tax, and we don't want that. So I'm going to give some different scenarios. All right, scenario one is two jobs with different pay scales. So this means one of two things. Either it means that you're filing single and you have multiple jobs with different pay scales, or it might even mean that you're filing married jointly and you and your spouse each have different pay scales. Okay, so it either can apply to this example. Okay, so in my tutorial video, if you've seen it, in step two, there's a box that you can check at 2C that says basically that you have multiple jobs, right? So that's just kind of the easy way you can check that box. And what that'll do is it'll tell the employer to withhold at a higher rate because they're accounting for another job, right? Whereas if that box is unchecked, your employer might be thinking that that's your only source of income, right? So then they're not withholding enough. However, the issue with this um, is if your job changes mid-year, or if one job is a much higher income than the other, then just simply checking this box isn't enough. And so in this case, we definitely want to do the multiple jobs worksheet. Okay, that's going to be on the W-4. You'll see that worksheet later on. It's on like page 3 or 4. You'll see that. We'll even put it on the screen now. And what you'll want to do here is you'll want to follow the columns from in one column it's going to show the higher paying job, and then in the other in the rows, you'll follow a column and a row together, looking at the higher and the lower paying job, and it'll take you to an intersection point. It'll have a number, and that number then goes in step 4. So that's the more precise way to take care of step 2. Okay, so if you watched my first video and you just checked that box in box 2C, know that if you have multiple jobs with different pay scales, it's very possible that that's not going to be enough. So we'll want to do the multiple jobs worksheet instead. Okay, scenario two. Maybe one spouse is self-employed, right? Or maybe you have a W-2, but then you also have self-employed income. So the reason a W-4 isn't going to really see any self-employed income because self-employed income's taxed a little bit differently. So when you're an employee, you receive your wages and you get your paycheck net of 3 different taxes. So they take out Social Security tax, they take out Medicare tax, and then what you're filling out on your W-4 is federal income tax, okay? When you're self-employed, you're paying all 3 of those taxes yourself. So what that looks like is on your tax return, you'll add a Schedule C for your side gig or your self-employed business. And whatever that net income number is, so that's going to be maybe you got a 1099, but you had expenses. You can write off your mileage. You can write off supplies. You can write off any of applicable expenses. But once you get down to that net income number from your self-employed activity, you're going to have to pay it's basically 2 taxes on the tax return. One is the federal income tax. That's going to fall, in your marginal tax bracket, right? And then there's also what's called self-employment tax, which is a 15.3% added tax, which is the same thing as Social Security and Medicare. Okay. But when you're an employee, the employer is paying half of that, and you are withholding half every single time they run payroll, regardless of the way you fill out your W-4. Generally, because generally the W-4 is going to be helping you get to that federal income tax amount. Okay, so sorry for the long spiel, but for self-employed, we want to make our W-4 adjustments a little bit differently. We want to use that step 4 to come up with that total. So it's very important for self-employed. We don't just check the box at 2C and treat it like another job, but instead we calculate not only the additional tax, federal income tax, but also that 15% self-employment tax. Okay, scenario 3. That's going to be dependents, but you've since had a divorce or a separation, and maybe now you're filing as head of household or married filing separate. So there's a lot of head of household confusion. That's the first thing I'll say. If you are married at the end of the year, even if you're in the process of getting a divorce, you cannot file as head of household. You have to file as married jointly or married separate. So I did a video on the married separate filing. Check that out. We'll put that in the link below as well. Generally, married filing separately is the least favorable way to file. So oftentimes, if you can avoid that, you would want to. In my video, I explained the, I guess, pros and cons and maybe why you would file that way. But all of that to say, head of household is a status that you can use when you have dependents and you are unmarried. But if you're legally still married on the last day of the year, that's not an option. So that's a big point of confusion. So I wanted to point that out. The other thing is obviously if you're in the process of separating, and if you maybe, let's say you are separated and you're filing either married separate or you're totally divorced and you're filing head of household, well, just know that only one of the two of you can claim the dependents. You can't both continue to receive that benefit, because when you were married jointly, you were both receiving it together. Well, now if you're separate, only one of you can claim the dependents. Okay, so that's important to mention. So make sure to update that dependent step 3 on your W-4 if and when you are separating from a spouse. So super important. Okay, so the big point here is the W-4, it's a tool, okay? It's not a guarantee. If income changes throughout the year, if you get a new job, if you leave one job, start another, if you start a side business, if you get a divorce, like, things are going to be changing. So when these life events happen, update the W-4, because a lot of people, that's maybe the last thing they're thinking about, and then maybe the next thing they know, a year or two have gone by and they never updated. And so then they might find themselves in a spot where they, don't want to be. So if one of these scenarios sounds like you, this is exactly the type of planning that we do here at Sullivan and Grantham. So please let us know. You can leave a comment below if you have any specific questions. If you're interested in setting up a consultation, please reach out. You can visit our website and we'd be so happy to help. So thanks again, and please give us that thumbs up and consider subscribing if you enjoyed today's content.